PNB Housing Finance, like I said, has come out with their Q4 numbers. Let's connect with Mr. Sanjaya Gupta, the MD of the company, who joins us now on the show. Mr. Gupta, thank you for joining us. Congratulations on a good set of numbers. NII growth is strong. However, we are seeing some pressure on spreads due to rising competition. What's the outlook ahead on spreads and margins, and is there scope to pass on the higher borrowing costs to consumers?
Actually, spreads and NIMs are a factor of your product mix and the segment mix, and there our consistent strategy will help us to maintain a spread of about 200 basis points to 210 basis points going ahead. NIM has a sort of a variable, which is the net owned funds, and since we have securitized a handsome portfolio of about 3,200 crores in the last quarter, our gearing is low, hence our NIMs are going to smarten up. Right away they are at about 307 basis points, and I think they are going to stay in that range of about 305 to 310 basis points. And liquidity is something which bothered us in the last quarter, bothered the industry, but I think it's going to improve and that is going to settle down. The ability to transfer higher rates of interest, we have a portfolio of about 73% which resides on variable interest rates. We have already done one change of 25 basis points, and let me tell you, it was a very pleasant surprise. The customers took it pretty well because our underwriting is robust and conservative, so we don't go too deep into bottom of the pyramid, which gets rattled by increasing rates of interest. And I think the profitabilities are also going to be insulated from this phenomena, which is temporary.
Thank you so much for joining in on the show. We just wanted to get in a perspective, Mr. Gupta, on your asset quality. That has been holding well so far. What is the kind of NPA trends that you've seen in housing, construction, finance, non-housing book, etc.?
I will just, first and foremost thing is that 0.33% gross NPA is not by fluke, but is because of our robust operating model and our technology, and obviously our go-to-market strategies, our underwriting, our delivery model and our servicing model. So it's a combination of everything, and it reflects very well about the robustness, operational robustness that this company has built into the segment. Now, if you were to ask me, my wholesale book, which has construction finance, lease rental discounting, corporate term loans, is about 13,000 crores out of 62,000 crores of AUM that we manage, and it has an NPA of only 11 crores on it, and I think we are going to resolve it, we are going to cure it in Q1. So
okay, well, we'll wait for that, but meantime AUM stands at about 62,000 crore rupees. So where do you see your loan book over the next 1-2 years?
I think at an industry level, if it grows at about 20%, the AUMs, we are very much poised to grow much faster than that.
Okay, and how long will your current capital last to support your growth plans? And even the parent company, PNB, that holds almost 32.9% stake in the company. Are there any plans by the parent to sell stake?
The way we are growing, we will be back into the capital market to raise ordinary equity somewhere in the last calendar of 2019 or the first quarter, the last quarter of calendar 2019 or the first quarter of calendar 2020, because when you go to the capital markets, you have to also time it, and by that time our NOF itself should be somewhere between 7,700 crores to about 8,000 crores, and and we will be levered at about 11 times, and that's the time when we will visit the capital markets again. Coming to the second part of your question on PNB, I think that's a shareholders matter. I'm not authorized to talk on that, but I think PNB as a promoter loves this franchisee and they will like to keep it. because it's adding also value to the parent. So that's what I can say at most.
Right. Thanks very much then for joining in and giving us a heads up on the quarter gone by as well as the growth outlook going forward.